Hi everyone, and welcome back to the morning report analysis with me, Richard Perry, market analyst at Handtech Markets. I'm going to move on to sterling dollar now. And this drift lower that we've had in sterling dollar over the past 7 days, 1, 2, 3, 4, 5, 6, into its 7th day now, continues. And we're now into this $1.70 support to up towards $1.7060. We're into this band of support now, and it's really not showing any signs that it's stopping yet. And it just depends on really whether it's going to stop. I think it will. I think $1.70 is a fairly strong support, and even then under that you've got $1.6950. And I think it will stop, but it's just continuing to drift lower at the moment. If you were watching our webinars that I did yesterday, you will know that this 89-day moving average has contained the last 3 big corrections on sterling dollar, and I believe that ultimately it may well do again. However, what you're probably going to find is that ultimately you'll start to form a bit of support, maybe a bit of consolidation as this moving average continues to rise, and then it unwinds that way. But I still think that this $1.70 big figure mark is a pretty important near-term support, and I think that's where we're going to be coming back to, and I'm fairly confident that that's going to be the case. You've got all these momentum indicators that remain just in corrective mode, but are also in bullish configuration. So you're not a million miles away, I don't think, from the RSI being unwound. 39, about 40 was the last time that it stopped at around that 89-day moving average, and it's currently around 47. So you could still have a little bit further to go, but I think that the bulls are not going to be too far away from forming a bit of support and looking to buy, and that $1.70 big figure being also psychological as well, I think means that it's likely to be around that sort of level. If you look on the intraday chart, it is still fairly corrective. I did talk about that 55-day moving average. It did break to the upside, but then straight back down on those Bank of England meeting minutes yesterday. If I zoom in, but it seems to be that that's held as a resistance again this morning. So you'd still say that that is a basis of resistance. 55-hour moving average there on the intraday chart. I mean, you look at these momentum indicators; they're all still very corrective, aren't they? Look, the MACD line's below neutral, and the RSI consistently below 60 in the rolls over in the mid 50s. So that is again corrective. So this correction is still ongoing, I think, at the moment. But I am still thinking that it's going to be finding support around that $1.70 mark. So that's my expectation at the moment. But still, at the moment, we're just on that drift. But I'd be still on the lookout for a buy signal, because ultimately I think it will be supported, and it will ultimately then come back and retest that key high of the key multi-year high of 71.91. But just at the moment, it's just still in that drift mode. But I'd be waiting for that buy signal. You've got retail sales out today for the UK. That could have an impact on this chart at 9:30, and also weekly jobless claims as well for the US. But until then, I wish you good luck, and I will speak to you later. Thank you.